Venmo, a popular money transfer app, excels in facilitating quick and easy transactions between individuals. But what about borrowing money? While Venmo boasts a range of features, borrowing directly through the platform is not one of them. This video clarifies the current functionality of Venmo and explores alternative solutions for your borrowing needs. At its heart, Venmo operates as a peer-to-peer P2P payment service. Think of it as a digital equivalent of handing cash to a friend. You can send money, split dinner bills, pay rent to a roommate, or send gifts, all through the Venmo app. Request money. Need someone to pay you back? You can send a request specifying the amount and purpose. Venmo lacks borrowing functionality. Despite claims circulating online, Venmo does not offer a direct borrowing service. This means you cannot apply for loans or access credit lines within the app. Here's why Venmo doesn't facilitate borrowing. Focus on P2P transactions. Venmo's primary function is to enable swift money transfers between individuals, not act as a lender. Limited financial services. While Venmo offers features like debit cards and direct deposit, it isn't a licensed financial institution authorized to provide loans. Responsible borrowing alternatives. While Venmo doesn't offer borrowing options, several responsible alternatives exist. Traditional banks and credit unions. These institutions offer various loan options with clear terms, interest rates, and repayment structures. Microfinance institutions. These cater to individuals with smaller loan needs, often with flexible repayment options. P2P lending platforms. These connect borrowers with lenders directly, allowing for potentially lower interest rates than traditional loans. However, thoroughly research the platform's reputation and terms before proceeding. Choosing the right option. Selecting the most suitable borrowing option depends on your specific needs and financial situation. Here's a simplified breakdown. Small, short-term needs. Consider credit cards. Use responsibly and within your limit, or borrowing from close friends or family with a clear agreement on repayment. Larger loan requirements. Explore bank loans, credit unions, or P2P lending platforms. Remember, these options typically involve stricter credit checks and may come with higher interest rates. Financial planning tips. Budgeting. Create a realistic budget to track your income and expenses. This helps identify areas to cut back and avoid unnecessary borrowing. Emergency fund. Build an emergency fund to cover unexpected costs and prevent resorting to borrowing for minor financial setbacks. Debt management. If you're already in debt, prioritize paying it off. High-interest debt can quickly spiral out of control. While Venmo serves as a convenient tool for sending and receiving money, it's crucial to remember it doesn't function as a lending platform. For responsible borrowing, explore alternatives like banks, credit unions, or P2P lending platforms, keeping in mind factors like interest rates, repayment terms, and your creditworthiness. Always prioritize financial planning, budgeting, and building an emergency fund to minimize reliance on borrowing.